I have a great pleasure to welcome our panelists to today's Frontier Opening Bell. Thank you so much, everyone. It's a Friday. Ali Segar, the CEO at Segar and Associates in Dubai. Ali Kansachu, the CEO and founder of Rich Frontiers Management in Nairobi. Oreoluwa Odetunde, who is in charge of macroeconomic analysis at Greenwich Merchant Bank. And Luke Ofojebe, who is the banking and head of equity analysis at Vertiva Capital Management. Good morning to all of you. Thank you so much. Let's keep the ground running with the market wrap. The Algeria story is all over the social media, how the stock exchange arrived at 6.23% yesterday. The South African GSC softened by 1% on the back of the wider softening in developed markets equities on Thursday, and the whole virus appetite evaporating between Monday and today. Kenya Stock Exchange down 0.56%, just as Equity Bank got itself the most valuable company listed on the Nairobi Securities Exchange. And the whole issues around the Kenya Power annual shareholders meeting today. Egyptian market about 0.2% green on the day that the Egyptian central bank cut interest rate softly to about 8%. The Ivorian market was down 0.36%. So we'll go straight to Nairobi, and later Ali brings us up to speed what to expect today as the shareholders of Kenya Power PLC are holding a key meeting for this key company within the East African space. But everyone will give Oreoluwa and Ali a bit to talk about the electricity regulatory framework for Africa, the new AfDB report around the leading countries in Africa, why this regulatory framework is very important in terms of power provisioning for industries and across for life and living across the continent. Ali, let's raise the curtain with us, Ali Khan, on the Kenya Power AGM right now.
So Kenya Power is holding an AGM. They've reported a loss for the first time, I think, in 30 years. There have been a significant number of challenges. They're the main power distribution to everybody, and there have been significant issues. Of course, the president decapitated a lot of folks from the board earlier this year, but they're still looking to navigate their way back. But I think there'll be a lot of unhappy shareholders at that meeting today. If I can just touch on a couple of things, obviously Ethiopia remains extremely fragile. Reports out of Amnesty of serious problems over there, and lots of footage coming on social media. That remains a significant challenge. It's already hurt Ethiopia's Eurobond. And I think we're going to have to now significantly reprice Ethiopian risk going forward. And I think that's something investors need to consider. It has been the poster child of African GDP growth. I am hard pressed to see how they're going to post positive GDP next year. Quickly, if I might just touch on the Kenya shilling. I saw earlier this morning we were at a fresh record low. And the concern here really is it's been managed for a while quite effectively, but one worries that having spent $500 million supporting it over the last 4 to 5 weeks, the central bank really does not have the ammunition to keep that up. And we know that those sorts of situations develop into asymmetric downside moves, and we might be on the cusp of one with that. With respect to the electricity regulatory frameworks, interesting report from the African Development Bank. Uniquely in Kenya, we've had the challenge that actually we've put on too much supply. And the problem is the ability of the consumer to absorb those costs is simply not there. And this has been one of the challenges for Kenya Power. And in fact, many of their power purchase agreements have been egregiously overpriced, I'm afraid. So that's adding to the problem. Equity Bank, most valuable company in the Nairobi Securities Exchange. That's not on a market capitalization basis. Of course, that's Safaricom, which has been performing very well since releasing those half-year results a couple of days ago. notwithstanding a single-digit dip in profits at Safaricom. The market has looked through that and thinks that it was a fairly robust performance. The Kenya government's looking for tax from any corner it can think of, and it's looking to raise money from the digital economy, which has grown by leaps and bounds. But so far, I haven't seen, you know, how the strategy is going to play out. Tidjan Thiame, who I have a very high regard for and respect for, he really did a tremendous job at Credit Suisse. Did not get credit for it. I worked at Credit Suisse many years ago, and I thought that during his period, the bank found a mission and actually was doing tremendously well in a very difficult time. And Rwanda, this is the nature of President Kagame, and you know, I love his attitude towards talent. He has a talent acquisition program, and you know, I fully believe in what he's done, which is to just onboard African talent wherever he can find it. And this is something that other African countries should think about, because you know, it's all about your human capital. Kagame gets it, and he'll continue to be an open door for African talent, and this is just confirmation of that.
Thank you. Thank you, Ali Khan. Just a minute quickly, Ali Sega, in terms of the electricity regulatory frameworks within the North African region.
Yes, you know, I think it's in the whole Africa. I think, if I'm not mistaken, whole Africa is producing the equivalent of Belgium in terms of electricity. So we can say that Africa don't really produce electricity. North Africa, especially Algeria and Egypt, want to be electricity or energy exporter. So not only on oil, but also on electricity. So they're building some station here and there to produce electricity, to export it into Morocco, Tunisia, and Libya. So I think the new regulatory framework will also enable to have more transparency on this, because as you know, electricity and all energy sector is not really transparent. So with this new regulatory framework, I hope, and we hope all that the transparency will increase in this sector.
I was just about to ask Oreoluwa for her views on this, but let me ask Luke very quickly. When you look at electricity regulatory frameworks, is it the framework of regulation as a problem with Nigeria, or you think that is where the bulk of the problem really is, or implementing what we have on paper?
First and foremost, thank you for the question. I think there are other factors really to consider when it comes to the implementation of this framework. I mean, so looking at the current states of the electricity value chain in Nigeria is not really impressive. And that explains why we still have very low power output in the country. So first and foremost, we have major issues when it comes to power infrastructure. We have issues as regards the flow of liquidity across the value chain. And we have issues with regard to having cost-reflective tariffs. So these are major impediments to any major reform that the government wants to put in place. And looking at what we are seeing currently in oil prices, the major source of government's revenue, oil prices at very low level. That has really limited the ability of the government to carry out its plans for infrastructure upgrade along the transmission grid. We understand that last year the government was able to enter an agreement with a German firm. Can't really remember the name of the company now.
Yes, Siemens.
Yes, Siemens. Yes, thank you very much.
I will try to pay up part of our own counterparty funding, kind of.
Yes, and the plan was that they would help to upgrade the country's infrastructure, power infrastructure, that is transmission capacity, to about 25,000 megawatts over the next 5 years. I mean, clearly, when the government entered the agreement, oil prices then we're at $65 per barrel. Looking at what oil prices are doing right now, and the latest information that the government is actually the government is owing a number of civil servants outstanding salaries for up to 2 to 3 months. I mean, I really doubt if that project is something that will materialize over the next 5 years. So that means that we just continue to see that inadequate power output, despite the fact that installed capacity is currently at about 14,000 megawatts. So that's one. Then we still have the issue of liquidity, poor liquidity flow. I mean, what the government gets from the discos is much lower than the amount of power that the discos are supplied with. And what the government pays the power producers is much less than what the power producers supply them with. So that's another major challenge. And that's why we are not seeing any major improvement in the demand for gas. Not that we don't have major gas producers in the country, but the incentive to go into gas production is not there, because first and foremost, you have the price for gas being capped at $2.50 per scoff to power producers. And these power producers, despite that cheap gas pricing, they are not producing much, because when they produce more than we need, the transmission grid cannot support it. Two, the government doesn't pay them fully for the amount of power that they produce. So that's another factor. Then the last one is the tariffs, really. I understand that we've raised tariffs, but are we going to see that next year? Because even with the increase in tariffs, we are yet to get to that fully we are yet to get to that level where it's fully cost reflective. And so that's also another factor that still affects implementation of this framework. Until we get these things right, we might not be able to implement the right reforms in the power sector.
So the regulatory frameworks for Nigeria is hobbled by so many fault lines, as it were. It's difficult to straighten it and get it to deliver power to the people. But regulatory frameworks very important in everything you're doing. But let's go to the West African market, and I'm sure Ali and the rest of you were salivating yesterday with the Nigerian stock market about 6%, and you folks wish you were here. Bosin and the rest folks and Luke are just cashing out, man. So what's going on? Airtel Africa also announced shareholders in Nigeria could take their dividend in dollar terms. Ghana wants ENI to merge Oilfield with Springfield. Yesterday, the country lost one of its most iconic leaders, Jerry John Rawlings, and he died just about 2 months after his mother died in September of this year, around the middle of September. Quite a loss to this West African country. But again, another news from Ghana this morning is that the government is planning to list about 18 state-owned enterprises on the Ghana Stock Exchange, preparing them for the market. This is huge, Ali, isn't it? I know Kenya is also planning with the CMA to get some SOEs listed on Nairobi Securities Exchange.
So I think, look, I think it's a silver bullet to do this. And we've seen it work before in so many different jurisdictions. I remember it working in the United Kingdom under Mrs. Thatcher. You create more ownership, you improve the management of these state-owned enterprises, you just lift the entire game. And really in Africa, the change can be very dramatic, because a lot of these SOEs are essentially beholden to the government of the time, and you tend to find a lot of bad behavior, and this improves automatically. So kudos to Ghana for doing that. I wish Kenya would go back to the days of Kibaki, where we had a similar program. But I think essentially what's going to happen, Boason, is countries are going to be forced into this, because we're now seeing, the default coming out of Zambia. It's a signal in the noise. A lot of these countries are way too debt-ridden. They are still deluded about how they're going to get their way out of it. And you're going to see a process, I think, where countries are simply going to have to get with the program And, you know, I got to commend Ghana for getting with the program earlier than others, but we're going to see this develop across parts of the continent going forward.
Yeah, I agree with you. A lot of inefficient utilities, state-owned enterprises, just a drain pipe. I think I'm trying to remember there was one report recently, not too long ago, a couple of months ago, about the problem of state-owned enterprises when you talk about a couple of African countries. Look at South Africa, for example. There's a whole lot of a drain pipe. I think in North Africa, I can't remember whether it's Tunisia or Morocco, that also spoke about they want to move on state-owned enterprises because they're a drain pipe on the economies, isn't it, Ali Sega?
Yes. Exactly, yes. I think, you know, in Morocco and Tunisia, I think this is a real issue, in fact, you know, because they're more exposed to the rest of Africa. For Algeria and Libya, it's not really an issue. So I think it's a big issue for Tunisia and Morocco. Yes, indeed, yes.
Thank you so much. Let's go to South Africa and check in with what is the unemployment figures keep rising. I'm trying to understand. These mining output down in September, but Multichoice is making money, by the way. I'm sure all of us, nearly all of us on the continent are watching the DSTV and cable news during the lockdown and what have you, working from home. I'm sure Luko Fojebe will be doing more of that these days as he works from home, because you need to stay with the television, whether you're watching Bloomberg or CNBC, whatever you're watching. So Red Profit up 68%, and the number of active subscribers climbing. Namibia inflation lower to 2.3% October. Look, this is your Multichoice. Are you spending more time on Multichoice?
Lately, no, not really. It's only during some time of the day, like say between the hours of 2:30 and 3 o'clock, I want to watch some markets programs, equity markets programs on CNBC and the likes. And when I was also following the US election, what was happening, CNN, BBC. So lately it's more of CNN, BBC at some time of the day, really, not as much as I used to.
But again, the working from home, you think has impacted positively on Multichoice revenue, profit?
I can't really say, but what I think is that it should, because a number of people right now will be more enticed to watch TV programs while they are working. I mean, so when it's time to take your break, your 1 hour break, or maybe an hour and a half, something like that. I mean, you can just spend that time, you know, having your lunch at the same time. You are watching a TV program. So I think that must have, in a way, entice people to make subscriptions during this period, because I understand that the behavioral pattern for Nigerian consumers of digital TV subscription is that when there is a major event, I know there is a show called Big Brother Nigeria. That's a major event. So anytime there is any major show happening in the country, that's when you see an increase in the number of subscriptions. Or there is a football tournament like the World Cup, Champions League. These are things that actually encourage people to renew their subscriptions. But without these events, given that they are now working from home, a number of people are working from home, there is that, you know, incentive to subscribe, because you just want to feel to some extent entertained while you are having your lunch break. So I think that should have supported their performance.
Ali Khan, thank you, Luke. Ali Khan, how do you think South Africa will handle these unemployment numbers? I'm getting seriously worried. I've spoken to mining experts there. They're talking about the problem with mining. New investments is not flowing aggressively into South Africa. Some of these going to Zimbabwe, going to Zambia, going to Tanzania. And it looks like they just can't get this industry, this behemoth, up and running. And this is one industry that creates jobs.
So firstly, you know, the unemployment number since the start of the ANC government after apartheid has been intractably high. And it's been a challenge for every administration from Nelson Mandela. And I think, you know, when you see it, the optics of those numbers are so horrendous because it's, you know, you're talking 41%, I think, at the last count that I saw. And really, you know, it creates huge problems for the South African government and the system. If you haven't got your young people in gainful employment, you know what happens next. And therefore, it's a serious concern. With respect to attracting investment into South Africa, look, you know, South Africa is very attractive from a capital markets perspective, but from a actual bunging in money and building, making investments. Although it's a very industrialized country, people are very nervous about things like labor relations. You know, you have easier labor relations in places other than South Africa. So I do think this is, you know, one of the big challenges for Cyril Ramaphosa. And for now, you know, you can talk about massive infrastructure projects, etc. But, you know, the real silver bullet is creating opportunity at the ground level and people creating jobs. And I just don't see that yet.
Very nice way of putting it. Yeah, though an advanced economy, when you talk about infrastructure and what have you, or highly industrialized, but creating opportunities at the bottom of the pyramid is becoming very intractable for the ANC since the Nelson Mandela's administration. I get that. I get that point. Very, very valid point you raised there. Let's just touch on North Africa very quickly, and I'm sure Ali Sega is waiting to take us through his views on the overnight deposit rate cut yesterday by the Egyptian Central Bank to 8.25%. We want to take that for us very quickly, Ali Sega?
Yes, so it's the second time in a few months that the central bank interfered in the rate, in fact. So the first time it was in September, and now it's in November. So the move is there to, we can say, to sustain the activity in Egypt. As you know, in Egypt, the inflation is really, really low. It's not necessarily a good news for consumption in Egypt. So the central bank have to interfere to sustain the economy, I think.
Ali Khan.
Yes.
What's your outlook on yesterday's rate cut by the Egyptian authorities?
Just to reiterate, Egypt remains, I think, the favorite carry trade since at least 2015, with very few exceptions. I was keeping an eye on the currency. The currency remained fairly stable. You're still getting, in terms of absolute rates, given where the inflation rate is, you're still getting 400 basis points of this. So there's room for them to cut more. But as I've said before, they're very, very cautious about moving at a speed with which the market is comfortable with, notwithstanding the fact they did that very dramatic cut a few months back. So I feel confident that they understand how to manage the international dynamic and the domestic dynamic. Obviously, they're looking to stimulate the economy more. But so far, you know, the growth numbers out of Egypt have held up. And if tourism starts to open up with the vaccine, I'm not so confident about that. But if it does, then I think, you know, that will give an added boost. Overall, I can't fault the Egyptian financial management. I really can't.
Luke, give us your view of this week's market week in Nigeria. What's driving this very red hot daily performance that in a single week, it looks like the market's gained north of 10, close to 12%?
Really, it's just what's is a reflection of what we are seeing in the fixed income market. I mean, rates at multi-year lows. I think the latest auction that they did, it ended at 0.3% for the 1 year bill. So, I mean, for fund managers in that space, really, what are you going to be telling your clients? That you want to give them 0.3% return at the end of the year? Whereas inflation in Nigeria is currently at about, is north of 13%. Yes. So clearly it's no brainer that they just need to look for other investment securities they can put their money in. And that's why we've been seeing that surge in liquidity inflows to the equity market. So clearly what's driving this rally in the equity markets is more of liquidity diversion from the fixed income market, and not necessarily improving macroeconomic fundamentals or micro um, um, economic fundamentals. So it's just more of liquidity diversion. And
Just
how long are we going to see this? That's the big question on the table. How long is this going to last? Are we going to continue to see this rally in the stock market? For now, we can't really say. Well, as long as rates remain low, we might just continue to see investors, picking stocks in the equity space. We might just continue to see this rally going forward.
okay. So when we look at this rally, and you speak about the fact that yes, the economy is not fundamentally sound on the fiscal side. The monetary side also have a whole lot of issues with exchange rate, interest rate, and all that. But again, are the companies that are moving, are they fundamentally sound?
I mean, for some of them, they are. So looking at consumer goods, for instance, the closure of the land borders have really supported the demand for their products. I mean, looking at what Farmi did in its full year results, as well as its Q1 results, we saw double-digit growth in their turnover as well as bottom line, and we expect that run rate to be maintained next year as well, given that the borders remain closed. For other consumer goods companies like Guinness and Nigerian breweries, they were heavily impacted in Q2 due to lockdown measures that were put in place. I mean, but given the fact that those strict lockdown measures have been erased, rather we have very soft measures now. So that would definitely improve the supply of their goods across their supply chains. So we should see better performance going forward for these companies, and more so the lower base we've experienced so far this year is going to support the growth we see next year for a number of these consumer goods companies. Then my major worry now is the banks, really, because we've seen like a consistent drop in rates. So what this means is that so far this year they've been doing well, but given what rates are doing, and given the fact that some of them have not been aggressively growing their loan books, so I'm a bit worried about their performance next year for some of these banks. So rates are low. What that means is that interest income from investment securities is going to decline next year by the time you compare year-on-year performance. Given that some of them are also not growing loans because they are very skeptical about the recovery of the Nigerian economy. You don't want to grow your loan books, and at the end of the day, you'll be recording a high level of defaults. So on that basis, income from loans is also going to drop next year. So I might see investors reacting negatively next year to that performance. By the time they start releasing their interim results next year, Q1 results, Q2, you try to compare with 2020 results, it won't look impressive to investors. So we might see investors selling down some of these banks in the first and second quarters of next year. However, I think the big winners at the moment we see be the consumer goods. A number of them are actually fundamentally sound. Then for the oil and gas space, I mean, looking at what oil prices are doing, yet I understand that there is already that positive news in global markets that Pfizer has come up with a potent vaccine for the virus. But the question still remains, how soon is it going to reach every part of the world? So, and that's why we've not seen that significant jump in oil prices. And let's not forget that the utilization of labor in the services industry is something that has been structurally affected, and it's going to take a number of time. And I do not think it's going to go back to pre-COVID-19 levels. I think for some of these companies in the services industry, they might just want to carry on with this work from home strategy going forward. So that's definitely going to impact oil demand. And let's not forget that we still have cases of some menial job losses that we cannot get back post-COVID-19. So definitely oil prices, we don't see a significant jump in that space. And that's why OPEC members have even agreed that they might not be lowering their cuts next year on this basis. So what that means that for oil producing companies in Nigeria, we might not see oil revenue growing significantly next year. However, for the downstream companies, I think it's a good one for them, given the deregulation that was effected in the month of September. So going forward, margins will improve, turnover will improve, bottom line as well will also improve. So I think they are also one of the winners to look at going forward. Thank you.
Thank you so much, Luke Ofojebe, and thank you so much, Ali Kansacho, the CEO at Rich Frontiers Management in Nairobi. Thank you so much. A very cool day. Have a great, cool weekend. And if you get some sunshine, Ali, let's be the first to know on Monday. I'm sure Ali Sega is getting some sunshine in Dubai. Have a great day as well. Enjoy your Friday. Luke, thank you so much. And Aurelua, definitely from Greenwich Merchant Bank. I guess she dropped off she's quite a bit busy over there. Thank you so much, gentlemen and ladies. Thank you so much. Have a great weekend and see you back next week. Thank you. Bye for now.